Good afternoon, energy leaders, producers, investors, policymakers, and all you power players out there. You're tuning in to the Energy Mixx Radio Show, where oil, gas, LNG, and global energy realities take center stage. I'm your host, Kym Bolado, and today we are packed with insights that you don't want to miss. Joining me today is a true authority in the energy world. It's Robert Rapier, who is the editor-in-chief of SHALE Magazine and a senior contributor to Forbes magazine. Robert brings a decade of engineering expertise and market analysis, and he's also one of the most trusted voices when it comes to oil, gas, LNG, and global energy trends. Now, there's a whole lot happening out there right now, from record-breaking U.S. LNG exports, especially out of Texas and Corpus Christi, to political geotensions involving Iran, Venezuela, Colombia, and Cuba, all of which have real impacts on the global energy markets. We also want to talk briefly about updates on Guyana. Today, we're cutting through the noise to focus on what trends, facts, and Today, we're cutting through the noise to focus on what's trending, what's factual, and what's truly driving energy markets. Robert, welcome back to the Energy Mixx Radio Show.
Thanks, Kym. Looking forward to diving in here.
Man, we've got a lot to cover, and we did our, right before the holiday, before the end of the year, we did our educational show, we did a closeout of the year, and when we were doing this, I don't think that Venezuela the story had broken. So I'm like, we need to get back on the show and talk a little bit about a lot of what you know. And we are going to cover that a little bit later on in the show. President Trump's response to ExxonMobil, the meeting he had with the oil executives. But I want to start with LNG. I want to start here at home first. Now, the U.S. LNG exporting capacity is expanding rapidly, particularly along the Gulf Coast, with projects like Corpus Christi Stage 3 with Cheniere and other LNG companies coming online. From your perspective, where is the U.S. and where do we stand today when we look at the global LNG market? And then maybe you can tell our listeners, how is this affecting Texas being in that leadership role? I mean, because we have Houston, Ship Channel, then we have Port of Corpus Christi, and we have other ports too that have LNG. And so Texas is really a hub for exporting to other countries. So tell me a little bit about your thoughts. Where are we with the LNG market?
So let's take a step back here, because if you look at the past 25 years in natural gas, the story is just mind-boggling. I mean, it's worthy of a book. 25 years ago, U.S. natural gas production was declining, and Cheniere was actually building an LNG import terminal.
Right.
And I remember Matt Simmons, who wrote Twilight in the Desert. He predicted, I think, by 2005, we will have a natural gas crisis in America with no solution but to pray. And about that time, hydraulic fracturing and horizontal drilling were combining to in the natural gas fields first to start unlocking gas that had always been economically out of reach. And production started to pick up about 2005. And I met a geologist at a conference in about 2008. And I talked to him and I said, man, there's a lot of hype about this shale gas. I said, seems like there's a lot out there. What's your feeling? And he told me, he said, you have no idea what's coming. He said that we are going to have such a massive expansion of natural gas in this country. People can't even wrap their minds around it. And he was right. Over the next decade, we pretty much doubled natural gas production in the United States. Cheniere flipped over their natural gas import terminal to turn it into a natural gas export terminal. We had, fracking started in the gas fields, but then it went into the oil fields, and then you had associated natural gas with the oil. So natural gas, we started to enormously increase we became the world's largest producer of natural gas, and today we are by far the world's largest producer of natural gas. And along the way, we started, increasing exports of liquid natural gas, and that has just increased and increased and increased. And we became the world's largest LNG exporter a couple of years ago, and we've continued to grow that. That has restructured the global order. I mean, Europe is no longer dependent on Russia for its natural gas. They're getting a lot of natural gas from us now. And that really changes things up, and it changes energy security for them over there. So, the natural gas story is absolutely just phenomenal. And if you told somebody, I mean, I'll guarantee you, if you went back to the late Matt Simmons in 2003, 2004, and said, I will bet you $1 billion the U.S. is the largest LNG exporter in the world in 2025. He'd have been giving you 10 to 1, 100 to 1 odds on that because it looked so absolutely improbable. So this story is amazing. The U.S., Qatar, and Australia, the three countries there, are the world's largest LNG producer. But, a decade ago, 15 years ago, the U.S. wasn't even in the conversation there. It was just those two countries. So I can't emphasize enough just how amazing this story is.
And it is, because when we look at, and maybe you can speak to this just for a few seconds, LNG is, this liquefied natural gas is actually going to our allies that need it. So that way, like you said earlier, they're not buying from hostile countries like Russia. But there's another important factor about liquefied natural gas when we look at the environmental discussion as well. It's one of the, first of all, most plentiful resource we have, but it also is a little bit lighter when we look at, the whole environmental impact compared to other types of energy products. And I don't know if you saw an article that came out the other day they were starting to look at the cost pertaining to these small nuclear reactors. And they're wonderful too when we talk about the environment, but it looks like they're going to be extremely pricey and energy intense to create. So talk to our listeners a little bit about what is the importance of liquefied natural gas when we think about it from an environmental standpoint. It's not perfect, folks, but it's one of the best resources we have, right?
Right. And the reason is, so if you want to produce a megawatt of power and you do it with natural gas versus coal, you're emitting about half the carbon dioxide with the natural gas than you are with coal. And that's just because there's a lot more carbon in coal than there is in natural gas. Natural gas has one carbon and then four hydrogens. That's methane molecule, carbon, CH4. Coal is a lot more deficient in hydrogen, and so when you burn, you get a lot. When you burn methane, you get a lot. You get some carbon, but you get water too. When you burn coal, you get a lot of carbon and a little bit of water. So that's the issue there. You've got a lot more hydrogen in natural gas, and so it burns a lot cleaner and emits far less CO2 than when you're burning coal. Now, the world's largest producer of power from coal and the largest user of coal is China. So if China would switch as much power as they can to alternatives besides coal, global emissions would probably start to decline. China and Southeast Asia overall has driven global carbon emissions over the last 20 years. I mean, U.S. emissions are relatively flat over the last 50 years and have actually declined over the last 10 or 15 years because in the U.S., natural gas displaced coal in power plants. And there was also an element of renewables there to helping to displace coal, but it was mainly natural gas. And that's why U.S. emissions have fallen so much, even though the population's grown, even though our energy consumption has increased.
Absolutely. So staying on LNG and now giving our listeners an appreciation of why we should really like that we're going to turn into, or we already are, a major player in liquefied natural gas. Staying on that topic, we are on track to firmly establish that the United States will be the #1 LNG exporter. So my question for you is, what production and export statistics support this outlook, or do you agree with it? And where do you see us heading in the near future when we're talking about liquefied natural gas?
Well, so all you have to do is look at the trend line. The trend line, from 2005, it turned upward, and we've increased natural gas production virtually every year since then. I don't know how many years in a row we've set records, but it's been quite a few. We set records all 4 years of the Biden administration. We were setting records before the Biden administration. We set records. I think we'll set another record this year. We set a record last year. We'll set another record this year. So natural gas production just continues to increase and increase, and it's increasing faster than U.S. demand is increasing, and so that supports more LNG exports. Globally, natural gas production is the fastest. Natural gas is the fastest growing fossil fuel, and so the natural gas production supports that. And the U.S. is helping enable the global conversion from coal to natural gas by exporting LNG. So I think the trends look good. I think there's still a lot of natural gas out there. I think I think we'll see natural gas continue to expand for longer than we'll see oil continue to expand.
Perfect. Where are we on the time? Are we still okay?
He warned us 3 minutes about 2 minutes ago.
I didn't get that text. Okay. So, I guess I did. I didn't see it come through. Oh, there it is. 1 minute.
Just said
okay.
1 minute. Yeah.
Sorry, Callum. Okay, 1 minute. Well, moving along, Robert, because I want to cover a lot in this show. Of course, we will end with White House and Venezuela, so you don't want to turn away at this point in the show. But as we get ready for break, I want our listeners to understand there's a lot of headlines right now with Iran. And we're going to talk about Iran when we come back from break. But can you briefly give our listeners an understanding? There's a lot of headlines going on, but there's tension around the Strait of Hormuz. Can you quickly tell us how important, well, for listeners who may not know, what is the Strait of Hormuz and how important is it before we start talking about Iran?
Right. I mean, it's the world's most important oil choke point. So every time there's a concern, it dips real deeply into Iran, and Iran could stop all traffic in and out of the Strait of Hormuz. And that would have a devastating roll down effect for the rest of the global oil markets. I mean, a lot of the world's oil exports roll right through that, right past Iran. And so if Iran shut that down, it would really shake up the world's oil markets.
And I think that would really be shaking up a lot of other things that we probably don't want to see happen. So thanks for explaining the Strait of Hormuz. Hang on a second. I'm sorry. The Strait of Hormuz. Sorry, people just keep calling in. Is it Hormuz or Hormuz?
It's Hormuz with a Z.
Hormuz. Okay. The Strait of Hormuz. Did I say it right? Hormuz?
Hormuz.
Okay. The Strait of Hormuz. When we get back, Robert, from break, I want you to tell us a little bit about what's happening in Iran. It's pretty hard to miss because we have rioting in the streets and there's a lot of media coverage. We're going to talk about what's going on with the oil. You're listening to the Energy Mixx Radio Show, and we'll be right back. And we're back. You're listening to the Energy Mixx Radio Show. My guest today is none other than my favorite co-host, the editor-in-chief of SHALE Magazine, Robert Rapier. Robert, you explained before the break a little bit about how important there's a specific area that runs right near Iran, and they kind of control or try to. It's called the Strait of Hormuz. And you explained to how important it is. If that should be shut down, come under attack in any way, shape, or form, it would have really severe global consequences for a lot of the world. And we all know that when somebody's threatening oil like that, I think we're going to have some problems. And I'm talking about potential wars, bombs, and things like that. So let's talk about Iran continues to dominate energy headlines, especially with what's going on with that tension around the Strait of Hormuz. So from both an oil and liquefied natural gas standpoint, how real is the risk of the supply being disrupted potentially there? And how serious do markets take those threats? Are we seeing jumps in the market? And also, what is the White House saying about this?
Well, I think they've said before that, shutting down the Strait of Hormuz will be considered an act of war. and
Well, let's just get that right out of the way.
Yeah. So it's not just, this will be serious. I mean, a lot of countries would consider this, an act of war. Yeah, it would really disrupt things, not as much for the U.S. We don't get a lot of oil that comes through there, but there would be a trickle down effect because as countries lost access to oil exports coming through that area, and the reason it's an issue, it narrows at a point to about, I think, 20 miles or 15 miles or something like that. And it dips into Iran pretty deeply. So it's like a bay that goes into Iran. And they could pretty easily control that. They could shut down shipping right there. It's a very, very serious thing. And they know it's a serious thing. So it wouldn't be something that they would take lightly. But if they felt sufficiently threatened, they might do that. But it would be considered. We'd probably have military action there. I mean, that's something that could probably trigger military action if they shut down the Strait of Hormuz.
Wow, that's pretty serious. Let's now talk about Venezuela a little bit. Everybody wants as much information as they can about what's happening. No doubt this country holds an enormous amount of oil reserves. I think it's over 300 billion barrels. And it continues to face political and infrastructure challenges. What we're seeing evolving is potentially U.S. policies and sanctions. So I want to talk about what is your outlook for Venezuela oil production and exports over the next couple of years. But we're going to break this down a little bit more than just that. I want to talk about that. I want to talk about the White House response. I want to talk about the legalities over there of what would happen. I want to talk about ExxonMobil. So this is just the starting of this deep conversation. First of all, going back to the question, seems to be evolving U.S. policy and sanctions. So what is your outlook for Venezuela oil production and exports over the next couple of years? Can President Trump really get it up and running the way he's saying he's going to do?
So, Kym, I could do a whole show on Venezuela.
We've got quite a few segments left. Let's go.
Well, I worked for ConocoPhillips in 2007 when Hugo Chavez expropriated our assets. And I often said it felt like he put his hand right in my pocket because the share price got hammered. ConocoPhillips had profit sharing where they would dump money into our 401ks at the end of the year based on how well the company had done. And our stock price got hit hard. So employees were affected by that. We saw a significant impact on the company when Hugo Chavez took over. So I have followed this issue very closely for many, many years. The court cases, the rulings against Venezuela, the repeated rulings against Venezuela. So we could go all the way back through the history, or we can talk about now, what's happening right now. After the expropriation, ExxonMobil and ConocoPhillips did not agree to terms, very tough terms dictated by Hugo Chavez. I mean, Venezuela was already getting a lot of money off these projects at no risk at all. I mean, ConocoPhillips and ExxonMobil took all the risk. And then when oil prices started to go up, Hugo Chavez said, yeah, thank you very much. I want to jack your tax rates up much higher than we agreed to. And you're going to have to make the National Oil Company of Venezuela the majority partner on all these projects. And ConocoPhillips and ExxonMobil said no, but Chevron worked out a deal where they said, okay, we'll stay. Now, I suspect it was not lucrative for Chevron at all. It's probably been a money-losing venture, but I think that over time, they said, eventually things will flip back the other way and we'll be here and we'll be able to, capitalize on this. And so they are there now. And what they have said, so they're partners down there in Venezuela's projects in the heavy oil in the Orinoco belt. And they've said that relatively quickly they could double production. I think they're producing close to 250,000 barrels a day. So relatively quickly, they could probably get, a few 100,000 barrels a day. But beyond that, now, so Venezuela's oil production before expropriation was above 3 million barrels a day. Today, it's below 1 million barrels a day. They could probably get back up to 1 to 1.2, maybe 1.5. they're a long ways, decade or more away from getting back to where they were. And that's just because a lot of the infrastructure has deteriorated. A lot of the technical expertise is gone. So, it's going to take a long time to get production back up if they're ever able to. And that also, oil price is an important thing. The oil sands are not as economically competitive as, you're not talking about like Saudi Arabian oil, where you're drilling a well and out comes light sweet crude. You're talking about having to put infrastructure in the ground. You're having to heat this oil. You're having to dilute it with naphtha or light crude oil. So there's a lot of factors here that drive the break-even cost of that oil much higher. And so that's a challenge. And for an oil company, oil companies are very conservative. They want to see stability over a long time frame. And I'm guessing we'll get into it after the break, but that explains why oil companies so far have responded the way they have over Venezuela.
Well, before we go into break, I want to say what I saw, because I listened to the White House when President Trump held his meeting with the energy executives. And, I was quite proud because I could count at least 4 covers that were of SHALE Magazine that were sitting in that room. So that's a testament to how hard we worked to try to bring some of the top leaders in energy and, get their take on what they're doing. But the one thing, though, Robert, that, I think as much as I support President Trump, his energy policies, I voted for him, and I probably shouldn't have said that, but I do support what he is doing. But that doesn't mean that everybody is right all the time, especially if you're looking at it from a business model, but you don't really understand, or you're not looking at the background of everything. So what I want to talk about from break before we get back on the topic is that meeting. ExxonMobil's CEO, Darren Woods, made a comment that clearly President Trump was not happy with. One of the covers that we did back prior to you being the editor-in-chief of SHALE Magazine was a cover of Pemex. And at that time, it was because Pemex was changing, and their president at the time was Nieto. They actually had to change their constitution to be able to attract the energy industry again because of past problems similar to what we saw in Venezuela. So when we get back from break, I want you to explain the difference real quick so people understand that there's a lot of regulatory changes that must happen. Otherwise, we start looking at things that have happened before, what happened in Venezuela, what happened in Mexico. They're not at all alike, but I want our listeners to try to understand why this is a little more complicated than President Trump is making it seem. You're listening to the Energy Mixx Radio Show, and we'll be right back. And we're back. You're listening to the Energy Mixx Radio Show. My guest today is the editor-in-chief of SHALE Magazine, Robert Rapier. Robert, we've been talking about Venezuela, what's happened. I think, we all watched the meeting that the president had at the White House, and some of the oil executives were there. The CEO of ExxonMobil, Darren Woods, his discussion when he was asked what did he think, I think surprised President Trump of President Trump maybe not doing his history on what has happened to ExxonMobil. I don't even know if he understood that they were still in litigation with that country. But I asked you before the break to explain Mexico, because I think that Mexico is a different way of looking at it before we get into Venezuela. So our listeners really understand when we're talking about other countries, it is not like the United States. And these companies also have shareholders, which I don't necessarily know if President Trump has shareholders that he's in his private company before he became president. So maybe he doesn't have an understanding of how those kind of companies work. So let's start with Mexico. Tell us what happened and why it's going to be different than Venezuela.
Yeah, so everything south of the border, all those countries, Mexico, South America, they've got a long history of supporting politicians on the left, and politicians on the left tend to they see these oil revenues. If oil revenues are not there, nobody wants to invest, right? So. Right. when oil revenues are decent and, they invite oil companies in and the oil companies come in and they start to make money, there is a long history of seizing those assets and nationalizing the oil. Now, there's nothing at all wrong. If a country wants to nationalize their oil, that's their business. But we have laws in place that all these countries have signed on to that say if you nationalize oil projects, you have to pay fair compensation. And so Mexico, they've had to change their constitution, and they've had to do some things in order to try to attract investment. But companies are still not excited about going to Mexico. There's a lot of corruption. There's my company that I previously worked for, we were doing business in Mexico, and so I've got a little bit of understanding about equipment disappearing and having to guard
oil field theft.
Yes, it's it's a problem. So even if so let's pivot to Venezuela here and say even if the laws got changed, these projects are going to go across multiple administrations. And the problem with a company like ExxonMobil, ConocoPhillips, they're looking at, okay, we may have to invest $1 billion or $2 billion on a project that's going to last 30 years. Who knows what politics in Venezuela are going to be like in 10? I mean, they could change their constitution, they could change the laws, and then they could change it right back. So the U.S., what are we going to do? Are we going to constantly guard the oil fields down there with our military? I mean, eventually, the citizens, I don't think, are going to welcome that. And, it's going to be problematic. I really think President Trump misjudged the situation in Venezuela. I don't know if he was not well advised here, but he has said repeatedly, oil companies are ready to jump in and invest billions in Venezuela. And I think what has attracted him are the nature of Venezuela's reserves, the fact they've got the largest oil reserves in the world. And I think he's looking at them as, well, they could be Saudi Arabia, and we could be in control of that without really understanding those reserves. After the break, let's talk about those reserves. Let's talk about how they ended up with 300 billion barrels of oil reserves. Because 20 years ago, that's not what they had. So, suddenly they went from, I don't remember what it was, 60 billion or something to 300 billion. We need to understand that. I want listeners to understand how that happened. But the fact that they're sitting there advertising, we have 303 billion barrels of oil, more than Saudi Arabia, I think that's what got President Trump's attention. And he's like, well, who in their right mind wouldn't want to go down there? And, ExxonMobil CEO kind of embarrassed him, I think, when he said Venezuela's uninvestable, because this is completely contrary to what Trump thought. And again, maybe Trump's advisors are giving him bad information. But the ExxonMobil CEO, his response was consistent with what I've been writing in Forbes about Venezuela since this whole thing started. Nobody's going to want to rush down into Venezuela. Chevron is already there, so they will kind of be the Western presence, I think, that's able to help get production up a little bit. But even then, the politics are going to have to settle down. Chevron would stay and operate even if nothing else changes. But ConocoPhillips I don't think ConocoPhillips will go back because they've already pivoted to Canada. I don't think ExxonMobil will go back because they've lost a lot of money in Venezuela. And it's just, the politics will swing, even if they get somebody on the right in there that's pro-business and so forth, it'll swing back to the left before their project is over.
Absolutely. And they do take that into consideration. Let's take a quick break. You're listening to the Energy Mixx Radio Show, and we'll be right back. And we're back. You're listening to the Energy Mixx Radio Show. My guest and co-host is Robert Rapier, who is the editor-in-chief of SHALE Magazine. Robert, you were talking about that you wanted to help us understand how Venezuela had a reserve that you're not quite sure on the numbers, but it was nowhere close to over 300 billion barrels, which is what now, if you just Google it or AI it, it pops up with that number. Before you say that, though, I want to just briefly talk about, because we're going to get on ExxonMobil, but I do want to say, pertaining to President Trump again, his department, the Secretary of Energy, Chris Wright, is one of the most smartest and knowledgeable guys. And he does understand what's happening and a lot of the things. And it's just shocking to me that these two did not get together before they invited everybody into that room. And with Jeff Miller, who's the CEO of Halliburton, who's been on the cover of Shell Magazine, they were one of the byproducts of what happened in Mexico when everything was seized. You know, these are reputable, very global oil and gas companies or service companies, and they just can't fly by the seat of their pants as a private realtor the way he is. And so I wish that he would talk to Chris Wright before so he really had a good understanding. It would draw more of, I believe, all of the energy companies coming together and uniting instead of a lot of misinformation. So explain to us about how come Venezuela went from a certain number of barrels to all the way up to larger than Saudi Arabia. How did that happen?
Okay, so oil reserves are defined as oil that can be produced economically at prevailing oil prices and with current technology. So that means, for instance, if oil's at $100 a barrel, oil reserves are much higher for a country because you can economically produce more oil at $100 oil. But if they fall to $20, suddenly, realistically, your reserves just plummeted because you can no longer produce economically all that oil at $20. Now, in reality, oil countries don't update their oil reserves every few years just because oil prices went up and down. But at the beginning of this century, in 2000 to 2005 timeframe, I believe Venezuela's reserves were 60 billion barrels or something like that. And that was because that's how much oil geologists figured they could produce with technology at that time, at oil prices at that time. And so two things happened. ConocoPhillips and ExxonMobil are in Venezuela figuring out how to get that heavy oil out of the ground. So the resource has always been there. It wasn't just discovered. The oil reserves didn't jump up because of a discovery. It jumped up because these companies figured out how to get the oil out of the ground, and at the same time, oil prices were going up. And so from about 2000 to 2005 and into 2007, you had oil prices that went from $20 a barrel up to over $100 a barrel. At the same time, the technology is getting better. And so Venezuela decided at that point, hey, we can't just produce 60 billion barrels of oil at this price and with the current technology. We can produce 300 billion barrels. And so that is why the reserve was bumped from 60 up to 100. It was a function of improving technology and higher oil prices. Now, with oil prices at $60 or less, does Venezuela really have a 303 billion barrel oil reserve? No, they do not. It's less than that because you couldn't economically produce all that oil at $60. I mean, some of it, yes, but some of it is marginal. Some of it would require higher oil prices. But Venezuela has never adjusted that. I mean, there's a lot of prestige in having the world's highest oil reserves. There's a lot of politics there. So I don't think Venezuela is ever going to bump that back down, even if realistically that oil will never be produced if the oil prices stay where they're at right now. And so you won't see, Saudi Arabia producing, 10 or 12 million barrels a day. You won't see that in Venezuela. That oil is heavy and challenging, and it's just not a matter of putting a whole bunch of oil wells in the ground. So that's the story of how Venezuela's oil reserves got bumped up the way they did. It wasn't new discoveries. The oil, it was known to be there. It was just that higher oil prices made them say, hey, we can economically produce this oil now that's been sitting in the resource category. We can bump it now into the proved reserves category.
Well, I want to go back to the statement I opened up with at the beginning of this segment, which was President Trump has two excellent Secretary of Interior, Secretary of Energy, specifically Secretary of Energy Chris Wright, is an energy person himself. To me, it's almost like him having you as a Secretary of Energy. You've got an expert here. If you don't understand, first of all, this is why we exist, Robert. This show is to try to help people who are not in this loop, in this little beltway here. It's very hard to understand energy as a whole. You've got up, mid, down, petrochemicals, and then they're in itself, they're huge. And so when you're not listening to your secretaries, it really does show. And so I want you to tell me, when President Trump asked Darren Woods, CEO of ExxonMobil, what did he think? And of course, he said the infamous word, they're uninvestable, and it upset Trump. Explain to me why you feel that it upset Trump, and what could have Secretary of Energy, Chris Wright, have done better to explain to him, you've got to understand that these are publicly traded companies. We still have litigation. They still have litigation going on there. I mean, talk to our listeners about what really, in defense of Darren Wood, this was very inappropriate. This is not fair. And I love President Trump, but I'm going to speak the truth.
Yeah, so we don't know what Chris Wright was saying to President Trump, but we do know President Trump has a history of saying, I know more about this issue than anybody. So Chris Wright may have explained to him, and President Trump might have said, they've got 300 billion barrels of oil. They got more oil than Saudi Arabia. Of course, companies are going to jump at and Trump may have said, I'm more of a businessman than Chris Wright. And Chris Wright's run a company. He knows these things, and he's got a deep knowledge here of this area. It's speculation why nobody really got through to Trump and explained what was going on in Venezuela. So Darren Woods responded exactly
as he was legally bound to.
I've written
legally bound.
I've said in Forbes, no company is going to jump at the chance to invest billions in Venezuela. There's got to be, if President Trump wants that to happen, he's got to figure out another way to happen. But then we get into what are the consequences then if that happens to U.S. oil producers? Because nobody's asking that question. Although there was a Financial Times article today where there was some people quoted saying it will hurt U.S. oil producers. It can do nothing but drive down the price of oil, and that's already hurting U.S. oil producers.
Robert, let's take a quick break. We'll return back on Venezuela. You're listening to the Energy Mixx Radio Show. We'll be right back. And we're back. You're listening to the Energy Mixx Radio Show. My guest today is Robert Rapier, the editor-in-chief of SHALE Magazine. Robert, before the break, we were talking about Venezuela, of course, in the White House meeting. And we were talking about Darren Wood's discussion to the group about what he felt from ExxonMobil's standpoint. I really want you to drill down and help the listeners understand, while President Trump wasn't happy with it, he had a duty as the CEO who wanted to keep his job to respond just as such. Please explain it, why he had to say those things.
Well, so Darren Woods was maybe not very diplomatic because he embarrassed President Trump, who's been saying the oil company is going to get down there. And I think he asked him, how quickly can you be down there? And, Darren Woods completely contradicted him. Now, Darren Woods said what everybody else in the room was thinking. Imagine you are the CEO of an oil company and you've got opportunities to invest, and you're looking around the world, and Venezuela's got this heavy oil. Canada's got heavy oil too. Where would you rather invest your money? The logistics from Venezuela are better, but the politics from Canada are, an order of magnitude better. You could put a project in Canada and rest assured that in 30 years, the government of Canada is not going to seize that project. And you have no such assurances in Venezuela. We have seen those countries in South America. I advise people on investing, and I will advise them, consistently to stay out of South America. Even Petrobras in Brazil, they leaned on the government of Brazil leaned on Petrobras, years ago, and said, you're charging too much for gasoline, and they made Petrobras subsidize consumers there. And so there's a history all throughout South America of this kind of thing taking place. So if you're a CEO of an oil company and you've got $1 billion to invest, why are you looking at Venezuela? I mean, what is attractive? You've got a high risk, marginal oil price. So there's not a high reward. You got a high risk and a modest reward. So, unless somehow, somebody else is paying for this, as an oil company, you really are not interested in sinking a lot of money in the ground in Venezuela. I mean, you'd much rather look next door to Guyana, which has had an absolute miracle over the past decade, going from, no oil production at all to closing in on 1 million barrels a day, more than Venezuela. So, Guyana did not have a history of oil production. So, as an oil company CEO, you're looking around the world and you're trying to invest where it makes the most sense. And Venezuela is a place that oil companies have lost billions as governments changed, as, far left governments seized investments down there. And so, I think Darren Woods was just kind of blunt when he called it uninvestable. But every CEO in that room was thinking, yeah, I'm not going to rush back to Venezuela. And President Trump's been telling everybody they're going to rush into Venezuela. So, there was a contradiction, and that came out publicly when Darren Woods said what he said.
Possibly, maybe only ExxonMobil could say that to try to help the president understand. If you were in another country and a Trump hotel or casino was actually taken from you and you were kicked out of that country and you lost all that, you lost your big casino or hotel or whatever, and then you're still in litigation with them and you have shareholders, and we all know about the infamous ExxonMobil shareholders. They've been, they're always being attacked in all different ways, but I think that Darren Woods had an obligation to tell the truth of that. I don't want to be fired when I return to work because I didn't say the truth in the way of, first of all, you'd have to give me some kind of regulatory framework that we could work in so I could tell my shareholders it could go through legal. And then what does it look like? How much money will I get? Per the barrel, what's the profit margin? And then what do I tell my shareholders that I'm still trying to collect over $1 billion because of the last debacle when we were in Venezuela? What would my shareholders tell me? And that was not a consideration at all. And yet he was only trying, I think, to get his attention and saying, President Trump, I'm with you. But, you also said the United States isn't going to give me anything. Maybe if we had bailed him out, like we've bailed out the auto dealers with EVs or windmills or, wind turbines and solar, maybe he could see it that way. But President Trump was also very blunt about saying there won't be any money coming from us. Y'all are going to make a lot of money. What do you think do you think that statement was fair and accurate in some ways? And again, I love President Trump. I just am trying to get the listeners to understand. Don't blame either one. It's a problem because it's Venezuela. That's what I'm trying to say.
Yeah, and I don't know if Darren Woods said more, and that was just the clip that became the soundbite. Because you wouldn't just, I wouldn't, if it was me, I wouldn't just say, Venezuela's uninvestable.
He didn't. He was very diplomatic because I heard him. And but that was the ending of it, that he just kind of he was very nice. He said they were excited. He said not excited, but he said that what ExxonMobil was going to have to do was actually put a team together to go down there and do an exploratory to look at what's in there, look at the reserves, look what's available, just an exploratory team. And then he said, but as of right now, it's uninvestable. And that could have just simply been, Robert, because I still am owed $1 billion.
Right.
My company from this country. So maybe it was that. But please go ahead. He didn't just say that. He was nice. He was diplomatic in the way he tried to answer the president's question.
Right. And you make a good point that if President Trump had a hotel in Caracas that got seized and he took it to international arbitration and it was determined that Venezuela owed him billions of dollars, which they refused to pay. Now, they have given ExxonMobil something, but they owe the really big bill to ConocoPhillips, with interest and stuff. I think it's over $10 billion. They've consistently refused to pay that. They have appealed it. They've lost on appeal, and they have continued to refuse. And so if you were President Trump and that has happened and suddenly, the leader's removed, how quickly are you going to commit to sinking additional funds down there? You're going to say, I want to be made whole for what you did to me before.
Absolutely. And that's what President Trump should have said.
Yeah,
was, you know what? If they owe you money, they're going to pay you.
Yeah. not going to give you a chance to do it again. You're going to make me whole first.
Right. And that's what I'm saying is I think that, he's got such great secretaries. And this is a complicated thing. 14 years later, I'm still trying to figure it out because it's so large and y'all are experts in everything you're doing. But as we try to break it down to our listeners, bite-sized pieces so they understand, I just really feel that I love President Trump. I love what he's doing for the country. I support him in all policies, including energy. However, I just really feel that maybe he didn't quite understand what ExxonMobil had already gone through or what they were looking at. And maybe he didn't quite understand that Darren Woods is the CEO and very replaceable. He works for the board of directors and the shareholders, which I don't think President Trump has a publicly traded company. And so maybe he didn't quite understand. He was legally bound in some ways. And I just hope that I don't like to see the president upset with one of the energy companies and stuff like that, because they do work hard and they're providing an important service. We've got about 60 seconds left. Can we go back over real quick, Guyana? I'd love to leave it on a positive note. This is a game changer for Africa, isn't it?
Right. I mean, they've added, the world has an oil surplus right now. And one of the reasons is what's happening in Guyana, and what's happening in Brazil, and what's happening in the United States. You've got a lot of non-OPEC production coming on, but probably the dark horse there, the one that people don't know about, is Guyana. I mean, Guyana produces more oil now than Venezuela, and they produced nothing a decade ago. They came from nowhere, but there was a big discovery down there, and I think ExxonMobil's down there. So, if you're ExxonMobil, you'd rather be in Guyana than Venezuela. But, maybe someday Guyana puts a far left, person in office and it's all just deja vu all over again. But I doubt it. I think Guyana has established itself as a pretty okay place to do business.
Absolutely. Well, Robert, that is all the time we have. I'd like to take a moment to thank you for joining me and helping me clear up what's going on at the White House and in Venezuela, and of course, talk about the stats on liquefied natural gas. So thank you for joining me today. And I'd also like to thank our listeners. Thank you for tuning in to the Energy Mixx Radio Show, where Robert or I try to bring you the best stories with the most information so you can digest what's happening in the energy world. And if you enjoyed today's episode, please be sure to like us on social media. And if you want to receive free articles, analysis, and exclusive content from Robert Rapier and his team of writers at SHALE Magazine, head over to our website and sign up for the free content alert by clicking on the subscription box. Again, Robert, thank you so much for joining me on today's show and clearing the air on what's happening with Venezuela.
Anytime, Kym.